Good evening, everyone. Welcome back to the channel. Today's top business story is one that directly impacts millions of Americans. Because whether you take an Uber ride to work, order dinner through Uber Eats, or invest in Uber stock, this headline matters. Uber just delivered a major surprise to Wall Street. The company has issued a profit forecast that came in below expectations, and the market reacted immediately. Uber shares dropped after the announcement. So the big question tonight is, what's really going on inside Uber? And should consumers expect higher prices next? Let's break it down. Uber's profit warning. The key issue: Uber told investors that its next quarter profits may be weaker than analysts predicted. Now, this is important, because Uber isn't a small company. Uber is one of the biggest players in the U.S. transportation and delivery economy. So when Uber signals pressure, it sends a message about the wider market. Reason number one: cheaper rides are hurting margins. Here's the first big reason. Uber has been offering cheaper ride options and more promotions. That sounds great for riders: more discounts, more affordable trips. But from a business perspective, cheaper rides mean Uber earns less money per trip. So even if more people are booking rides, profit margins are getting squeezed. And Wall Street doesn't just care about growth. Wall Street cares about profit. Reason number two: costs are rising behind the scenes. Now let's talk about the second major pressure point. Uber's costs are going up. We're talking about higher driver incentives, rising insurance expenses, increased operational costs, inflation affecting the entire economy. So Uber is facing a tough balance. Keep rides affordable, while paying more to keep the platform running. That's not easy. Reason number three: higher taxes and regulatory pressure. Uber also pointed to another major factor: higher taxes. Large global companies are facing increasing tax and regulatory costs, and for Uber, that means even more pressure on profits. What this could mean for you. Now here's where this story becomes personal for everyday Americans. If Uber's profit squeeze continues, here's what could happen next. Uber ride prices may rise later in 2026. Uber Eats delivery fees could increase. Uber stock may stay volatile for investors. So whether you're a consumer or someone holding Uber shares, this is a story to watch closely. Bigger picture. A sign of the economy. Uber's warning is about more than just one company. It highlights a bigger economic reality. Businesses are trying to keep prices low for customers, but costs, taxes, and competition keep rising. And sooner or later, that pressure shows up somewhere, either in higher prices or lower profits. So tonight, I want to ask you, do you think Uber rides are about to get more expensive? Or will Uber find a way to grow without raising prices? Drop your thoughts in the comments. And if you want daily business and finance news explained clearly, like this video, share it with a friend. Subscribe to the channel. I'll see you in the next update.